Welcome back to Mortgage Chicks with Hot Tips. I'm Diana Harvey.
I'm Elizabeth.
I'm Kim Hairsted.
I'm Cindy Walker.
And I'm Stacey Van Skank.
Today we're going to talk about refinancing. Is it a good time or not? But before we get started, we really would like for you to like, subscribe, and share. This way you can see all of our episodes right here on YouTube.
And if you have any questions or topics you'd like us to discuss, please feel free to email us at mortgagechicks@vandykemortgage.com.
So today we're going to look at the pros and cons of refinancing in today's market. We're going to take a look at interest rates. Are they good? Are they not good? Are there any things other than rate to consider when refinancing? And we're also going to look at pulling cash out. When should you do it? Why should you do it? And what to consider. So let's start by looking at rates and whether or not they're good today. So Cindy, tell us a little bit about what's happening in the interest rate world.
Well, as I'm sure everyone's heard, rates are still at an all-time low. A lot of questions I get are people don't realize that you can do a 20-year term mortgage. We do 10-year term, 15-year term, 20-year, and 30-year. So the shorter the term you go, normally the lower the interest rate is, just by a little bit. So like 30 years are still good. We're right in the threes. 20 years usually about 1/8% better, and 15 years usually about 0.5% better. So rates are still good and low. They're predicting they're going to go up a little bit by end of summer next year, but we're still going to be seeing great rates, folks. So it's not going to affect our housing market at all, I don't think, because we're still going to be below 4%. We don't have a crystal ball. That's what we're predicting. That's what we're hoping. So there you have it.
Awesome. So we know rates are still pretty good, but there's other things besides just rates to consider when refinancing. So Kim, why don't you tell us some of the other things that can go along with why you'd want to refinance?
Well, when you're refinancing, there's a lot of different factors, and some of the factors are lowering your term. So a lot of people just hear 30-year fixed, and they just go by that. But if you can get a 20-year fixed, save 10 years of interest, and maybe have the same payment as you're paying now because of the new lower rates. And a 15-year fix, saving another 15 years. So it depends on where you are in your mortgage, in your current mortgage. Say you've already had your mortgage for 10 years. So when you have your mortgage for 10 years and you don't want to start over with another 30-year mortgage, you can do that 20-year mortgage, keep the same payment, or even the 15-year mortgage, keep the same payment, and save 5 years of interest. That's a huge amount. That can mean $30,000, $40,000 in savings over that 5 or 10 years that you're skipping ahead, basically. So you just skip ahead 5 years, and now you're, even a 25-year, if you're doing a 30-year right now, is always, an option to look at, and keeping your payment the same as it is now.
So in refinancing, we want to first take a look at interest rates, but then we also want to look at how much quicker could we possibly pay off the house.
Yeah.
Okay, Elizabeth, is there anything else we'd want to consider?
Well, absolutely. To piggyback on what Kim was saying about, reducing the term, a lot of times people are afraid to reduce their term because they'll think, oh my gosh, my payment's going to go up. But let's say you bought the house 2 years ago, you only put 5% down. You're paying mortgage insurance. And, $300,000 or above, depending on your credit score, that mortgage insurance could be $200-$300 a month. So you may find that because the equity and the values in the homes have been just going up exponentially, you are able to refinance, lower your term, and remove the mortgage insurance. So that's a good way of thinking. You may not think you'll actually lower your payment by reducing your term, but if you can get rid of the mortgage insurance, it makes a big difference.
Okay, so we've discussed interest rates. They're very favorable right now, and that's one reason to consider refinancing. The term of the loan and being able to shorten the amount of time frame you have the loan for, the possibility of alleviating mortgage insurance, and then also cash out. So, Stacey, let's talk about cash out. Let's talk about why would you want to take out cash out, and what would you do with that, and what's the best use of the money?
There are so many different things you can do with the cash out. Over the past 2 years, people have seen a growth of 14% in equity in their homes. I have a lot of clients, they're doing cash out, like for example, a home improvement. People maybe want to get granite countertops or, new kitchen appliances or floors. During the pandemic, people were trapped in their homes.
Oh, yeah.
Yes.
People learned that they loved their homes, they just maybe wanted to update it a little more. So a lot of my business right now for the cash out refis is home improvement, just to make them love their home even more. So that's one reason.
Well, and one of the things I'm seeing is I've had a lot of people that went ahead and did some of those home improvements, but they really racked
them on
up
their
the credit cards. Yes, you knew. You knew where we were going with that one. Yep. And so now they've got credit cards with high interest rates and high balances. And of course, we all know the balances get too high, that affects your credit. Credit scores affect everything. So I've had a lot of people look at consolidating, and with that consolidation, the interesting part is it wraps right around to what Kim was talking about, and able to refinance, get them a lower term, and consolidate those credit card debts that they've had.
And also, a lot of people have taken out home equity loans. And home equity loans, they are fantastic. Home equity loans have a teaser rate. That teaser rate for the first year, 1.99%. And what people don't remember is that's an interest-only rate. And you have options to make the interest-only or make bigger payments, and most people don't, myself included. Then the rate fluctuates. And it can go up and up and up and up. So people are finding when they first got their home equity loan, the payment, let's say, was $250. A couple years later, it's now $450. So why not pull the cash of the equity out of your home, consolidate to that, and get rid of the home equity loans? Because you just never know what the payment's going to be.
For sure.
Absolutely.
It's like having an adjustable rate mortgage, for
Yes.
sure.
Well, I'll tell you one way people for sure want to call. Just pick up your phone and take a look at the interest rate on most of your credit cards. Have you looked? 24, 27, 32%. Wow.
That's outrageous.
I mean,
Yeah.
wow.
So, well, in addition to that, I've actually had a couple of people call me and tell me that their financial planner told them that they would be better off pulling out some of the cash that they have in their house to make other investments. So that's been something that I was very shocked to hear from a financial planner, but they had the whole thing the strategy planned out about how if they just did a little bit here and a little bit there, they could invest their money much more smartly by refinancing. So that's another thing to look at in cash out for refinancing.
Or someone could do cash out, they could pull the equity out of their home and purchase additional real estate.
Ooh,
real
excellent.
estate is such an amazing.
Look at the
important-
growth you just said, 14% a year.
14%. And you look at what landlords are getting for rent right now. Why would you not? I can almost guarantee the amount of rent you're gonna get is well gonna exceed your monthly payment.
For sure.
So pull the equity out of your home, purchase more real estate with a real estate professional. Don't do it on your own. Please.
Amen,
girl.
Please. And have a portfolio of homes, long term.
Awesome.
Yeah.
So we took a look at interest rates, the fact that they're low. So if you're considering refinance, now would be a good time. We looked at lowering the term, so you're gaining equity quicker. We looked at possibly alleviating mortgage insurance, so that's a big help. Pulling cash out, eliminating those high interest rate credit cards, paying off home equity lines of credits, possibly in reinvesting in other things, and reinvesting in other property too. So now's a good time to take a look at your overall financial picture and see if refinancing makes sense for you.
So make sure that you like and share this episode.
If you have any questions or topics you would like for us to discuss in the future, please send us an email to mortgagechicks@vandykemortgage.com.
We also have a Facebook page. It's called Mortgage Chicks with Hot Tips. Like us, follow us. You'll find our teaser episodes and also our full episodes on there.
And also, it's available on Spotify and wherever you listen to your podcast. Thank you for joining us. See you next week.